Good afternoon and welcome to HYCM's online trading workshop with myself, Charles Cochran. I wish you all a very good afternoon and looking forward to taking us through the next coming hour with the latest markets updates and to see how we can look for opportunities in the financial markets. Just as folks are coming in, saying hello. Hi Ali. Hi Preben, I think it's your first time, good to have you. Raider, Sammy, good to have you. Yue, Ivan. Good to have some new faces as well as some familiar faces as well coming in. And just as other folks signing in, just going to go through the disclaimer, just to make it clear that the whole idea of this HYCM workshop is that this is providing educational analysis of the financial markets, so you can see for yourself how you might go into the future and decide to make trading decisions for yourself. This is not a signal service, so even though we'll be discussing entries, exits, stop losses, currency pairs, commodities, indices, this is not an invitation to trade, as it were. This is an invitation to develop skills so you can make good trading decisions for yourself. Just wanted to make that clear. I've just come back from one weekend in Dubai where I've been teaching 140 aspiring traders and traders how to develop professional trading tools. And you know, during the time of conversations in between breaks, sometimes people will come up and they'll say, you know, what's going to happen with this commodity? What's going to happen with that? Should I buy or should I sell? And each time I have to tell each person that when we're looking at the financial markets, we're looking at the factors that will influence buyers or influence sellers. And those factors are constantly changing. So take, for example, oil markets at the moment. We know oil markets are being sold and they're falling today because the risk is that coronavirus gets worse and less people travel, less airlines, less people using oil, so oil prices are falling. Now, of course, and so that would mean right now, at this point in time, we're expecting oil sellers. However, say the World Health Organization gave an announcement this afternoon and said, we have found a successful vaccine. We hope to have it ratified, pass through all the necessary criteria within the next 4 weeks. Then oil prices would rally because everyone would think, well, the coronavirus, we have a vaccine, that's going to be behind the global economy. It's a simple example, but that's why this disclaimer is so important, because what we want to do on this workshop here is we want to learn how to develop our own trading skills. So with that said, let's press on to the session. Now, the special topic today, now this is a really good special topic, and I'll deal with it right at the start of our event. It's the importance of fresh news and how to avoid getting trapped on old news. Now, imagine, this is something I shared at the Dubai seminar. Imagine that someone prepared a sandwich for you, okay? If they prepared a sandwich for you, that's great. Now imagine that sandwich had been left out for 12 hours. What would happen to that sandwich? The bread would go hard and the filling would go stale. You wouldn't want that sandwich. You see, the market is very similar. In the same way that we want a fresh sandwich or fresh food, the market really craves fresh news to move. So in other words, what we have to look at, we have to remember the importance of fresh news and make sure we don't get trapped on old news. So we'll be looking at that, and I'll be using an example during the session to illustrate that point even further. The handout for the session, you can find that handout underneath your handout section on the GoToWebinar control panel. Just click on the workshop handout and it will go up like this, and you'll see the handout. And this handout is simply there to identify the 5 main titles that you need to look at every time you look at trading. So every time before you trade, you should always follow these 5 criteria. And the last one is something you follow after your trade is finished, okay? So make sure you're looking back, looking forward, looking at the charts, looking at your risk, and then looking at the outcome of your trade. It's these 5 key things, and we'll be going through those in the session now. We will also look at trade ideas you may have at the end of the session. So any trade ideas, any trades you're looking at, just either jot it down in the question panel, the chat panel, and we'll have a look at that so we can learn together as we're looking at the different trades people have. So without further ado, let's get going. Turn to your handouts and we will begin. And the first thing that we do before we do anything is we look back. And when we're looking back, we want to identify the recent market mood by reading up on the last 2 sessions of market activity, and we want to identify key market sentiment. And can you summarize that sentiment in a sentence or 2? Now, that is fairly straightforward today, because the recent sentiment in the market has been, in a sentence or 2, coronavirus fears. You could just put it into a couple of words, because the market is getting very concerned now that the coronavirus is spreading, and that it's spreading in a way which means it's potentially out of control. That is the big fear. So I just want to show you some of the new no, hang on, where is this spread? Hang on, I've got a good website for this. Just bear with me and I will find a good website. Yeah, that's it. I'm going to put this website onto the channel as well. So I'm going to send it to you. I'm going to send it to everyone. Right. This website is a very good website for highlighting the spread of the coronavirus. I've sent it to everyone who's here today, okay? So the link I've sent you gives you a constant update on the coronavirus cases, okay? And what we see is when we're looking at just as this loads, we see obviously the heart of the cases have been in China, Hubei province, we know that. What we're starting to see now is the reason the market's been really concerned is there's been some large areas where the coronavirus has been spreading. South Korea has been one of them, big concern. Another one is Iran. You can see if you look at this Iranian cases, it's got 139 confirmed cases, 19 deaths, and there's 120 existing cases. That is in Iran. Looking at Europe, there's been a big spread in Italy. They've got 322 confirmed cases in Italy and 311 existing and 10 deaths. So you can see that, you know, there is some concerns that this spreading is getting worse. Spain, 9 cases, Germany, 18, France, 14, etc., etc. So what the market's starting to think is, well, imagine if this spreads as widely as it has in Asia into Europe, and then even North America. We can see in the US, there's a number of, okay, they're isolated cases, but they're still cases. So the big issue now with the financial market is that this is going to have a big drag on global growth. Now, that's why we have seen financial markets just plummeting recently. We'll just look at the S&P 500. See if we've got that. Can't remember what they call it here on the. There it is, right. Okay, looking at S&P 500, we can see we've got these heavy selling days. Now, the US cash open is due in about an hour, just under 2 hours. We get the US cash open, okay? And US futures are currently, I think they're marginally. Let me have a look. US, S&P 500 futures are flat on the day. Okay, so these heavy, you don't see these kinds of falls every day. I mean, that's a more than 3% drop, and that was a more than 3% drop. So the S&P 500 has dropped 6% in the last 2 days. Okay, so that gives some indication of how concerned the market is. Now, I'll show you what's been happening this morning. If you look at the stocks on the right, you see here. So the way the market opened, it opened up.
In comments from ECB's macro says on the strategic review, some of the ECB feel it's quite challenging to do this year. Is guidance also to be?
No, just get rid of the score. If you look at the chart on the right, this was about 10 o'clock, 10:30 this morning, when the European equity markets were down quite considerably. They were down, look, that the FTSE 100 down nearly 1%, Euro stocks, CAC 40 down more than 1%, IBEX, and DAX down nearly 1.5%. So some of those falls are very strong. Now, we've seen a little bit of tailing recently. So this stock market shot on the left is just before I started the webinar. So we can see here that prices are still down, with the exception of the PS Portuguese 20 and the Italian FTSE, which are marginally up. But now the Portuguese 20 is down and the Italian FTSE is up less, about 40.43%. So we can see that the market is in this big risk-off move. And look at the moves in the S&P 500 yesterday: 3%, NASDAQ 2.77%, Dow 3.15%. Anytime UA, someone just asked where I get this data. This data this is from the Bloomberg terminal. Okay, so I'll just show you. This is the Bloomberg terminal here. Okay, so that's it, and then this is where I'm getting all these data from. Okay, now that terminal is not really possible for the retail trader to get hold of. So the best place where you could get that UA is Icon. You want to get that from Icon, where you can get, or I'll give you a website UA that will give you some of these equity readings, okay, data. So I've sent that to you, UA. A company called TeleTrader, they do some free price feeds. So you have to check how up to date it is, but as far as I'm aware, it's been pretty good. So this risk-off mood is still very firmly in the market, and that is where we are today. The Nikkei overnight, the Asian equity market was down, the European equity markets are down, and sadly, it just seems inevitable that there's going to be more cases, doesn't it? Because how can this coronavirus really be stopped? It's continuing to grow. So the only good news is that mainland China cases are, it's a flattening of the number of cases. But other locations, you can see that's rapidly increasing. And a particular concern, Italy, that is a particular concern. And our schools have just had holidays, and you think all the schools holiday, maybe family or China. In the UK, you see quite a lot of UK children and maybe school trips. They went to Italy on half-term holiday break, so now they're coming back to the UK. So there's been quite a lot of travel. Raider, gold is down. Why? Well, it's just a pullback in gold at the moment, because if you look at gold is obviously a safe haven. Question from Radar: why is it down? Well, look how strongly gold's been bid. So you get pullbacks in these kinds of moves, but the swing point, Radar, is here. You see that swing point in the 4-hour chart. That is where near-term risk is. So for me, as long as that swing point is maintained, then the upside is bullish for gold. Okay. I wouldn't call it it depends on what time frame, Sammy. Is it a downtrend? No, it's not a downtrend on the 4-hour chart, is it, at all? And if you look on the daily chart, it's not on a downtrend. So you're going to get pullbacks in these kinds of markets. So even a pullback back down to 1600 still keeps the uptrend intact. So I'm not worried about that at all with gold, as long as the safe haven status. As long as the risk is in the market, then I'm expecting gold buyers. And I think, one place where you'd expect buyers from is current prices with stops here, and then looking for another play up to these highs, 1678, something like that. That would make sense to me. And obviously, with the weak data out from the US yesterday, that should be further upside for gold, as the Fed will be expected to cut interest rates twice this year. So there's upside pressure in gold. So if gold falls down further, then the next area where I expect buys is like the 1600 level. So that's what I'll be expecting in gold. I am expecting buyers still. You just got to remember, when price keeps going up and up and up and up, it just doesn't keep going up parabolic. There's always some kind of pullback. The market moves in these waves. And if the coronavirus fears get worse, then these bids are just going to keep coming into the market. And this is a place for longer term, for a medium term buyer, this would be a place to buy with stops just here underneath 1622. That's what I expect some buyers to step in here at this place. And if coronavirus fears get worse, then I expect gold to start moving to the upside. So that's what I'm expecting on gold. Okay, so we're in a very clear risk-off market. Okay, that's what we know. So when you have a risk-off market, this is what we tend. When we have a risk-off market, this is what we see. Sorry. Okay. When we have a risk-off market during risk-off times, we see the yen and the Swiss franc appreciating, and sometimes the US dollar acts as a safe haven. It's not acting as a safe haven at the moment because, let me explain why, because the expectations, this is the Fed watch, and the probabilities for a Fed rate meeting is there's a 60% chance of 2 rate cuts this year. Okay, so the chances are there'll be 2 rate cuts this year. So last week it was only 1 rate cut. So that's why we're seeing more chances of a rate cut, which is what has been weighing on the dollar index. So if you look at the Dixie, you can see that the dollar index has been selling off. Okay, so this selling in the dollar has been because there's more chances of now 2 rate cuts from the Federal Reserve, which is negative for the dollar. So that's why we've been seeing that dollar weakness. So just to say, although we're in a risk-off market, the US dollar can operate as a safe haven, but it's not right now. So at the moment, the currencies we're expecting to be bought is the yen and the Swiss franc. We're expecting yen and Swiss franc appreciation. We're expecting Australian dollar, New Zealand dollar, and Canadian dollar to depreciate. Okay, we're expecting these 3. These are called the commodity currencies. And because the Australian dollar, remember, Australian dollar has a very close relationship with China, the New Zealand dollar and Canadian dollar, CAD has a very strong relationship with oil. And because the commodities are losing value, the commodity currencies in turn lose value. We also expect to see falling equity markets, and we are seeing falling equity markets. And as I'm looking at the S&P 500 futures, I can see that they're now down 0.31%. So that sort of slight recovery we saw mid-session has faded, and we can see the S&P 500 futures are down, and we're looking for a negative open at the US cash open for equities. So this is what we're expecting, still the case. Similarly, we're expecting gold buyers and silver buyers. Okay, so gold and silver buyers are expected. And remember, the gold-silver ratio is very high at the moment. So because the gold-silver ratio is very high, that means silver is more attractive than gold. So silver could be a good potential alternative to buying gold with the gold-silver ratio very high at the moment. So, looking at the market, this is what we should be expecting. So that should be your playbook. When you come to your desk or you're looking at the market and you see this clear risk-off market, the thing you want to do is this is one of the things we've been teaching in Dubai, is you want to choose these currencies or commodities or equities for your trades, because this is where you're expecting this kind of reaction. And if you look at, so we'll look now at these currencies. So you can see, look, Australian dollar down, Canadian dollar is down, New Zealand dollar is a little bit mixed, but taken as a whole, the commodity currencies are down. We've got Swiss franc being bought and strong, and we've got a mixed picture of the yen, but broadly speaking, we've got safe haven currencies being strong. Now, one thing to be aware of, the Japanese yen last week wasn't operating as a normal safe haven with its normal safe haven status. It has been more recently operating in its safe haven status, but just to be aware of that. So if we were looking at trading at the moment, if I'm looking for a strong currency, I'm favoring the Swiss franc over the yen at the moment, just until it becomes clear what's happening with the yen. It's a slightly more developed issue. Sometimes these correlations break down. So that's just to make that clear. So given the fact that we know it's in this kind of market, okay, we know we're in a risk-off market. Here's a question for you. What do you think? So this is a risk-off market here, right? Now, if the market mood changed, so say for example, this is where I want to talk about what I mentioned here. Sorry, I've been confusing here. Like, this is a special topic, the importance of fresh news and how to avoid getting trapped by old news, right? So this is what you need to understand. We see the market's been falling. Now, in order for those falls to continue, we need some fresh coronavirus news. There needs to be more instances of it spreading, it getting worse, maybe new countries developing the illness. The sort of thing that would send this market even lower or further down the risk-off mood would be, something like, Italy's cases double, or 100 cases in France just revealed, 200 extra cases in Germany, that kind of thing. For this risk-off market to really accelerate further, we need more news. So when you get that fresh news, we get the fresh move down. But remember, if we don't get that fresh news, the sentiment eventually goes old. It eventually wears out. So you have to remember that when you're trading, you're looking for that fresh news. So, for example, coming to my desk this morning, there was fresh news that the coronavirus had got worse. So I knew that that was good for the morning session. I knew for the morning session, that would be continued negative pressure, and that would support risk-off trades. It's exactly the same in this afternoon. We have little bits of more negative news, which just helps keep the negative mood going. So what you have to look for is freshness of news. Now, here's an example that would make sense. Say, for example, the World Health Organization suddenly said, yes, we found a cure, okay? Now, if they say we found a cure, we'd suddenly see yen, Swiss franc, gold weakness, Australian dollar, New Zealand dollar, Canadian dollar strength. We'd also see oil strength. Right? Now, say that announcement happened now. That means for the next probably next 1 or 2 days, because the news is so good, we would see this happening. Okay, so Australian dollar, Japanese yen buyers, you'd expect them to step in and keep buying it up, keep buying it up. So that's something just to be very aware of. Look for that fresh news. And remember, the news is not fresh. Over about 24 hours, it's old news. So the market really likes it to be new and fresh. And so each day, each morning, you're looking for the freshest news to have the influence that will push the currency or the commodity or the index in the direction that you seek. So just don't make the mistake of reading up on a wrap and suddenly seeing, oh yeah, there was a market move, and there was some news that came out yesterday, and I'm gonna, it was positive for the Australian dollar, I'm gonna buy Australian dollar. That news yesterday has probably gone by now, the effect of that good news. So always try to make sure you're getting news as up to date and as fresh as possible. Think of it like that fresh sandwich. You only want to eat a sandwich when it's fresh. In the same way, you want to trade financial news that's fresh. A good tip is to read a market wrap. So go to a market wrap and find out what was the latest breaking news. What is the market focusing on? And it is worth paying for a good wrap. Maybe you could use a Randscorp service or some other service that you just know you're getting the reliable information. Okay. So as we look back, we've seen this risk off tone in the market. We've really gone through that. But we also saw yesterday some negative news for the Australian dollar. And here's an example. It's fresh. So when I came to my desk this morning, the fresh news was that the construction work done metric for Australia was a miss. Okay, it was a dismal reading, and this dismal reading was -3%. So it was the lowest of the analysts' expectations. It came in at -3%. Now the construction work done and the capex, and there's one other data point, my memory fails me, goes into the GDP reading for the Australia's GDP. Okay, so that is a negative input for Australian GDP. So of course that is going to be negative for the Australian dollar. So look, we've seen now that there's 2 reasons to sell Australian dollar. One, we're in a risk-off market and the Australian dollar depreciates. 2, there's been some negative construction work done data that flows into Australia's GDP data. So now we have 2 reasons to sell the Australian dollar. We also remind ourselves that the Australian dollar is set to fall as China is being shut down over coronavirus fears, and around 30% of Australia's GDP comes from trade with China. And iron ore is one of the largest exports from Australia, and iron ore is key for construction. And obviously, if coronavirus fears gets worse, construction is going to be limited as well. So there's kind of 3 reasons there for Australian dollar weakness that we have, right? So when we put that all together, remember, we always want to trade a strong against a weak currency. So this morning, it was quite plain to me, as it was the end of yesterday evening as well, that we're looking at a weak Australian dollar and we're looking at a strong Swiss franc. Can anyone tell me why I was expecting the Swiss franc to be strong, and what alternatives could I have used alongside the Swiss franc? Just jot it down in the question panel. So why am I expecting the Swiss franc to be strong? It's just a little test to help you guys learn. I know some of you guys will get this. Yeah, Raider, John, exactly. The Swiss franc is a safe haven currency. Well done, guys. That's spot on. So you can see that in a risk-off market, you get yen and Swiss franc appreciating. So that's why we've got the weak Australian dollar and the strong Swiss franc. So that means Australian dollar, Swiss franc shorts were in play for me this morning. That was the currency pair that I'm looking at and that I'm still looking at now. So we've done some of our hard work. Now, alongside this, the commodities, gold and silver longs look attractive, especially since they've pulled back. So you can see that these are commodities, safe haven commodities. So obviously, in this worsening environment, gold and silver longs look attractive. We've seen the pullback in gold and silver, and you know, even if we get more of a pullback, that still looks even more attractive for gold and silver longs, especially if you've got gold falling down to, you know, 1600, or got it falling down to, you know, 1580 would be very attractive levels for longs. Although I like a medium-term long here on gold and silver with just stops below 4-hour swing chart. That makes sense for me, given the current mood and the worsening outlook. Obviously, if the coronavirus situation gets better, then those gold and silver longs look less attractive. Okay, sentiment for the Americas session. We've got the same outlook. Gold and silver longs look attractive. Again, I'm expecting weak Australian dollar and strong Swiss franc. So I expect that same mood to last. So remember, each day, what I'm trying to do, I'm trying to look at the strong and the weak currencies, and for the European session, and the strong and the weak currencies for the American session. So I've got the same outlook here. Nothing has really changed. Looking at the equity markets, you can see that European equity markets, they're off their lowest levels for the day, but they're still in the red. Got S&P 500 futures are now down 0.10%. So this is a very strong sell-off, okay? And the thing to be aware of is that if the coronavirus fears does get worse, companies are going to be hit all over the world. You know, there was Lufthansa, a German airline, yesterday was saying that they've had to cancel their routes to China, and they're going to have some job losses as a result. It's serious. It's going to affect their profitability seriously. Air France, they're expecting to have serious issues because of the coronavirus fears. So there's a number of airlines that will struggle, and some of them may even have to close. So, you know, the longer this goes on, the worse it gets. And then think of the companies who are getting their components from China. They may have to halt their whole production line because they haven't got their components from China, and that could affect factories, UK, Germany, France, US, who are waiting for that. Not to mention Apple. Of course, they had their profit warning, expecting to miss their first quarter revenues, and they obviously manufacture in China. So the implications are bad, which is why we've been seeing this strong sell-off. So in other words, the mood, this risk-off mood, is strong. So still looking at these Australian dollar, Swiss franc. Now it's only now at this point that we start to look at the charts. We don't want to be just looking for technical reasons to enter. We want to be looking for fundamental and technical reasons to enter. So now we've got our fundamentals: gold, silver, Australian dollar, Swiss franc. Now we looked at gold and silver. We just saw very simply. If you look at the gold chart, this is where we look at our charts. We can just see, very simply, you can just see there's been a recent swing point here. Okay. We can also see that we've rejected this pivot point on the 4-hour chart. So a potential area to go long is anywhere in this region at market and stops below this level here. Now, if we hit 1600, are we wrong? No. If price goes down there, we're not wrong, but we've got to limit and define our risk, okay? So say your stop gets hit here, but the situation remains the same, then we can consider re-entering from 1600. There's nothing wrong with that, and it's more advantageous to do that than it is to have a, maybe price goes all the way down to here, and another place to put your stop would be underneath this 200 exponential moving average. Okay, so you have to endure all that drawdown before price goes up there. So you never know when price is going to catch on. But technically, gold longs look good from this level, from the fundamentals, and technicals look good with a stop underneath the 1620 region. So that's what's making sense there. Let's look at our dominancy currency pair. So here we've got the Australian dollar, Swiss franc. Again, that is, get rid of the pivot points. So here we could just very simply, we'll go down to the 15-minute chart, which is what I like for intraday trading, and we can just look for areas of resistance to enter. So we can see here, there's been resistance at this level, 6420, so just below the 6420 region, so 6417. We've got a little bit of support, term resistance, so a return up to there will be potential for a short. Similarly, turn up to here, 6430. The best level for a short today on the Australian dollar Swiss franc pair will be a return up to 6430. So a return up to there, as long as the risk move stays the same, I'm expecting sellers. Now, where do you take profit? Then you would take profit down at recent lows. Okay, so say you got a fill at 6430. Then we look at profit taking down here just above the 6400 handle, so around 6406. Okay, so it'd be for 24 points. That would be sensible again. And if price went all the way up to here, the 6450 and above level, in conjunction with the moving average just above here, you see you've got support, 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 resistance. So this level here would be perfect in this region. From there, just to there would be another good place to sell. Again, looking at profit taking just above recent lows, above the 0.6400 handle. So all of that makes, that would be how we the fundamentals and the technicals together, because we've got reasons for selling this pair. Okay, and that, we've got the reasons for selling this pair. Remember the fundamental principles. We're looking for strong against the weak, strong against the weak, strong against the weak. We've looked at the charts, so we've seen now what particularly we're looking at with gold, Australian dollar, Swiss franc. And we also look forward, and we can see that at 3 o'clock GMT, we've got new home sales. That has potential for moving the US dollar. If we see a poor result here and we see a weakening in the new home sales, then that's going to be more dollar negative. And we've got weekly crude stocks. Don't forget, US oil is being pressured at the moment because of the concerns over the coronavirus. Oil output is down. So if there's even more supply of crude, then that's going to be further pressure for oil. So look out for both of those events. Later, new home sales, the minimum expectation is 0.684 and the maximum expectation is 0.76 million. So just to be aware, that's the kind of minimum and maximum expectations. So if you get an actual reading that's beyond the minimum or the maximum, that tends to have the most reaction. So just to be aware of that. Okay, guys, what trades are you looking at the moment? This is your moment. Come and tell me. What trades are you looking at? And if you could just jot down the reason briefly, that would be helpful for me. So Yeah. Okay. Yeah. So let's look at the US dollar, Japanese yen. Yeah, US dollar, Japanese yen, we are expecting that to remain pressured on the day. Okay, we've got yen strength because of the coronavirus fears. Well, it's a bit muted, but broadly speaking, we have got the yen strength. That makes sense, John. I'm assuming that. Yeah, that's it. Okay, are you buying or selling dollar yen, John? Selling, yeah. Okay, that's good, John. Yeah, that makes sense because we've had weakness in the dollar. We've had some weak US US data that's coming out. So the risk for this event is new home sales at 3 o'clock. So just to be aware of that, John. But selling, yeah, selling makes sense on this pair for sure. Okay, and retracement levels. Just seeing where. So where are you selling from, John? Are you in the position? Yeah. Okay. Yeah. Good. That makes sense. Yeah, John. Excellent. That's using the principle. We've got the weak US dollar. We've got the strong Japanese yen. US dollar, Japanese yen shorts make sense. Yeah. Okay. Now UA CAD yen short. I like that a lot. I think there's a lot to be said for CAD yen shorts at the moment. You know, that's making a lot of sense, and your reasoning is good, Euro, because you've got yen strength and CAD weakness. So the reason you've got the CAD weakness is because of oil prices. Oil prices are down, so CAD's weak. Yen is higher because of safe haven commodity. So look, you can see the pressures there on the CAD yen pair, and it's been sold on the retracements today. So actually, that's a really good trade. CAD yen, really good. I like it, Yuan. Okay. Yeah, okay. Salvatore, US dollar, Swiss franc. Now, again, this is another sell. Because, look, part of the reason for the dollar weakness at the moment has been the increase in expectations of the Fed cutting twice this year. That's why we're seeing dollar weakness. So that's that mood that's still in that market. Okay, we got that mood there. Here we got US dollar, Swiss franc. Again, it's a short, Salvatore. We're looking for US dollar weakness, Swiss franc strength. So, potentially shorting from this level makes sense, the 0.9760. That's not a bad level because we've got some support. And then, you could take profit down 0.9736. The problem with this trade now is we've got 3 o'clock. We've got the US home sales. So that's the risk. Anything US dollar based that's intraday now is at risk of that new home sales out at 3. So any dollar traders, you've got to be aware of that. You either risk it into the event or you just close and take your profit out and then consider re-entering afterwards, depending on the news. Well, obviously really good new home sales, then we might see a little bit of strength in the US dollar. We'd have to see, but it's a risk. Okay. Okay, I'm really pleased, guys. You've chosen some really sensible pairs. That's very good. Dollar yen short, CAD yen short, dollar Swiss franc short. Yeah, that's excellent. I'm really pleased. That's some sensible ideas there. So keep up the good work, and keep your eye on the risk tone. Okay, that's going to be the key thing for the rest of the session. And one final thing I want to mention, and this is it's a very simple point, okay, but I want to mention it. And the reason I mention it is because I was speaking to a guy when I was in Dubai, and this was the second event of mine that he'd attended, and it really concerned me because he was just showing me some of the open trades he had, and he had 3 positions open without any stop loss on them. So if you're just new to trading, I know some of the regular guys, this won't be relevant for you at all because you've learned for sure. But if you are new, make sure you always put a stop loss on your trade. You always have a level at which you go out. Now, when I saw this gentleman and the fact that he had no stop losses on his trades, you know, and he was away from his terminal. He wasn't like he was just sat there at the terminal ready to get out at a moment's notice. He, you know, he opened at the third terminal, closed it down. He wasn't worried about not having a stop loss. Unexpected events can and do occur in the market, and if you are in that position, the wrong position, without a stop loss, it means your loss is potentially, you know, it'll keep going until your account runs out, whatever size that is. So number 1, please make sure you're trading with a stop loss. There's no reason for you not to trade with a stop loss. Okay, no reason whatsoever. Okay, John, you're out that dollar yen. Yeah, it makes sense. Yeah. So here's a good rule of thumb to manage your risk well: is match your account size and your trade size. So this does help. If you dial down the risk, use less leverage. If there's a general rule of thumb, if you try to trade without leverage, this will help your risk management. So say you've got an account of $10,000 US, don't let any single position be above 0.10 and go to a maximum of 0.20. Okay, so and then have a maximum of 4 positions open. So say you had a $1,000 account, then you only, you know, to make double-digit returns, you don't need to take huge risks with leverage. You can get by without. You can make double-digit returns without using huge levels of leverage. So you can still make double-digit returns and only trade with 0.01 on the $1,000 account. Okay. It will help your psychology tremendously if you start to manage your risk in this way. Okay, so you've got $100,000 account, you just trade with 1 lot, and then have a maximum of 4 positions open. And please always use a stop loss. Okay, guys, it's been a pleasure as always. It's been really good to have your trade ideas. Good to have you, John, Sammy, again, Van. And thanks, Yue, for your comments today as well. It's been really good. So take care of yourselves, and I hope to see you again next week for the week ahead on Monday. Yeah, you're very welcome, John. It's good to see you here. Really good. And I look forward to being in touch with you guys. Have a good afternoon. Thank you, guys. Watch out for that wrist tone. Bye.